Keep your radio dial right here. You're locked into the hottest news station on the planet. Hot 702.5 in FM sound. Blazing today's hip-hop, R&B, and pop music. Keeping your radio on fire. Bringing you the hottest, realest, riskiest talk shows live 24/7. Live on hot7025fm.com.
What's going on, everybody? It's your main man, 360, the poet from the Morning Wood, and I'm here to talk to you about the Sci-Fi Center. It's your Vegas home for science fiction, horror, and fantasy. From comic books, toys, and posters to movie screenings and live events, they've got you covered. Located at 900 Caron Avenue, Suite B209, give them a call, 702-900-4335, or reach them at thescificenter.com.
Hi. Hey.
What's up? All your favorite artists.
Check it out. Say my name. DJ Khaled. This is Mila J.
Bruno Mars. On Hot 7025fm.com.
Tune in now on hot7025fm.com.
Yo, it's Tavon Greatness Patterson. Want to listen to Hot 7025 on the go? Download the Hot 702.5 app on the Apple Store or Google Play Store if you got an Android like me.
Let's get it.
Yeah. Jones. Hey. Greg Deville was at it, man. Hey. If you want the real, holla at Greg Deville. He'll tell you how to do it. Now get to it. If you want the real, listen to Greg Deville. He'll tell you how to do it. Now get to it. I'm talking real estate, building wealth, making money for your family and yourself. Now tune in. We here to help. Now tune in. We here to help. You wanna be a broker, you wanna be broke. You wanna be the joker, you wanna be the joker. You gotta bring more to the table than your hope, dreams, and wishing. I can feed you fish or I can take you out fishing. I can show you the vision, addition and division, mathematic equation. Make the money flip like an acrobatic, amazing. Greg Deville help you build the foundation. I'm saying, if you want the real, holla at Greg Deville. He'll tell you how to do it. Now get to it. If you want the real, listen to Greg Deville. He'll tell you how to do it. Now get to it. I'm talking real estate, building wealth, making money for your family and yourself. Now tune in. We here to help. Now tune in. We here to help.
All right, Las Vegas, good afternoon. It's a partly cloudy afternoon on this Wednesday. It's 12 o'clock, and every Wednesday at 12, we're here. Greg Deville live in the studio talking wealth and real estate. We want to continue to do what we've been doing for the past 9 years, and we've helped so many of you. We want to continue to do that. 702-349-0162, Greg Deville. DeVille Realty Group, the largest black-owned real estate firm in the state of Nevada. This is what we do. We focus on helping to get Nevadans into home ownership. Now, remember, anytime that you are renting, you're paying into home ownership. I pause there purposely because you're paying in ownership when you pay rent, but you're just paying it someone else's. So it's like going to work every day and somebody else receives your paycheck at the end of the week. Can I say that, Kristen? Yes. Let me welcome my guest, Kristen. Kristen Whitney's from Gill Mortgages with us again this morning. And so we wanted to talk about some of the products that's available. Some of you that may have gone through bankruptcy. We'll be talking a little bit about that this afternoon and how much time you have to wait in between time. But in the meantime, good morning to you, Kristen, and how are you today?
Good morning, good afternoon.
Afternoon, yes. It looks like morning. It is afternoon. How are you today?
I'm good.
You feeling well?
So much. Yes, I am. Thanks for having me.
Glad to have you come back. So you always you came before with great information.
Yes, thank
And I
you.
thought, well, let's talk about this some more because 50 minutes goes by really fast.
It does.
Right? We've got a lot of playback on it. I did get a lot of playback from our last show.
Nice. I love
which
to
is
hear
good.
that.
Yeah, it was great. It was great. So it's been encouraging people to proceed forward. I know that. Have you noticed the new administration, people have been a little reluctant to proceed. They've been like, I don't know.
Yes, I have. And you know what's funny?
Yeah.
I've been getting notifications like weekly of programs that are going away.
Defunding.
Right.
Defunding. And so that's why we say you got to use it or we lose it.
Right.
So as long as you're in the program before, those monies are allocated, they're set aside.
Correct.
So, but if you don't get, set in motion, that funding gets snatched.
Absolutely. Did you hear about that grant that was going around and they super like widely advertised it? That's gone already too.
You know,
Because people sat on the sideline. It was a $50,000 grant that they were giving out.
Yeah.
And if you already had like a contract in hand, you were ready to go.
Yeah.
You were able to get that 50,000. But you know, people they stutter stepped and all the funding is gone now.
Yeah. I think people think it's not real. It's like one of those too good to be true.
Yeah.
I've been on radio, as I've mentioned a moment ago, 9 years doing radio. Wow. 2 and 3 channels, television, commercials. I've tried my best to tell people these funds are allocated for the first-time buyer. And not just those who said they never owned. Long as you have owned in the last 3 years, right?
Correct.
You're a first-time buyer. And I'm like, I'm begging people to come get the money. And they're like, well, I don't know, Deville, maybe next year. I'm like, maybe next year the money gone. So here's what I've learned to do. When I tell people the money's available and they say maybe next year, I say, bye-bye, we'll talk later. And I go over here and I give my energy to people who are willing to listen.
Who's ready to go.
Free buyer representation. You don't even pay me.
Right.
I'm paying radio stations and television stations to get the word out. Free buyer representation. I'm giving you free information.
Yes.
You don't pay me anything.
Right.
There is a transaction fee at my office of $5.95. That's the most you'll pay to get a house with Deville Realty.
Wow.
I really don't waive it though. People say, "But you're the broker. Can you waive it?" I don't waive it. It's a transaction. I have to have E&O insurance. Right. There are certain fees that I have to have to pay for every file.
And you probably have a transaction coordinator that you have to pay.
You have to pay, right? You have to give to all these different little things you have to do during the transaction. First, shout out this morning. I got my clear to close.
Yay!
Yes. So
we love that.
Yeah, we love CTC. So I got up this morning and said, hey, and it's early on. I think we're only like 15 days in.
Wow, that's good.
We go right in and order appraisal. So when you find the house, the biggest deal is having people to understand you're not going to find a dream home in your first home.
No.
Not if you're working with under 500,000.
Right.
Because even 500, not a dream home.
I hate when people say that people have only been staying in their house 7 years.
There you go. On average.
Yeah, on average. So when they say, well, this is going to be my forever home, it's like, you don't know that. Life comes with so many unexpectedness.
Yeah. Let's talk a little bit about the rates. I mentioned to you earlier, for those who may want to use a home equity line of credit. Can you explain to the person, do some upgrades, some improvements, there's some work that needs to be done. How can they get funding from the equity in their home? What are a few of the requirements?
So we have a couple of options when customers want to tap into their equity.
Okay.
A lot of customers, they are sitting on a ton of equity.
Right. Yeah.
Because of how the interest rates have been. And if someone has, a lot of reluctant to refinance and pull some cash out. So the answer to that would be a HELOC or a HE loan.
Okay.
So a HELOC is a home equity line of credit. It's essentially kind of like a credit card.
Okay, right.
But the limit is based on the amount of equity that you have in your home.
Right.
So they come with features, a draw feature. A draw feature is the amount of time you're able to make charges, we want to say, or pull from it.
Okay.
And those can be anywhere from 3, 5, 10 years.
Okay.
So that's basically your period where you can pull money off of it. Once that draw period ends, then you're making regular monthly payments on whatever the balance is at that time.
Is there a prepayment penalty to that?
No.
Okay, that's good to know.
No prepayment penalty.
So if I'm up to 80% when I do a HELOC and a HE loan, up to 80% of the value, correct?
We have some 90% options.
You got some 90%. Too. I don't know if people need to go to 90. I think Angie might. I don't know if you need to do 90 now. Hold on. Leave something in the pot, right?
Leave but we have it available.
We have it available.
If you need it.
Okay.
Yeah.
But now, so it's based on how much you use. So I refinanced back in 2020. Yeah, refinanced 29, might have been 2019. Got down to a 2.99.
Oh, wow.
Yeah, but I was at a 4.25 when I purchased in 2016. But then, 4 years later, refinance, got a ton of equity now.
Right.
What am I? So if I decided to, because I'm more into flipping houses and making money that way versus using my equity and getting another payment. I don't like payments, right? I try to keep, even I don't want car payments. I don't want none of that. Because you got to pay a payment and the insurance.
Right.
It's enough you're going to get a payment. I don't want two.
Right.
So if I use a certain percentage of the monies to pay off some stuff, right? And my payment went up $100. Yeah, it didn't change much, and I got like $80,000.
That sounds about right.
Yeah, it went up $100 because I reduced the interest rate from that 4.25 to 2.99. But today, where we are, a person does a HELOC, the rate goes up, not on the loan that's existent, correct? Right. Just on the money that you borrowed or that you're taking out on the HELOC.
Correct.
What is that rate today?
So you can get a rate anywhere from like the low 7s.
Okay.
I've seen them go all the way up to like 13. Well, it depends, on your credit score, your debt to income, and then your loan to value, how much you're taking out, just like with a traditional first mortgage. So you do have the option though to buy down the rate. So that means you pay a little bit more money to get a lower interest rate. Okay. It doesn't come out of your pocket. We can wrap it into the closing cost.
Okay.
So you still are able to, kind of pick the rate that you want on the line of credit. And, you still don't have to come out of pocket with it.
So you mentioned the closing costs. So now the closing costs are something I need to bring to the table.
No.
We can wrap the closing costs into that.
Correct.
Okay, cool. Because one of the reasons people are needing the funding is because maybe the job has gotten a layoff or something has happened that they need to get this money.
Right.
But maybe having the money in hand is not. But I can wrap that closing cost.
Correct.
Okay.
Correct.
What does my credit score need to look like to do that?
So we can go as low as a 640.
640. Okay. Okay.
Now, the restrictions come in, based on your credit score determines how high you're able to go.
Okay.
We typically like to see you at the 680 point.
Okay, yeah.
But once you get like 740, 760, higher up, then that allows you to borrow more.
Okay. Got you.
Yeah.
Now, we wanted to talk about too, and that's good information for somebody who has a home. You want to use some of that equity in your home to perhaps do. I did have a family who, used the equity, paid off some bills, paid down some credit cards, and purchased another home with the balance of that equity of that line of credit that they used.
I even had someone they took out a HELOC for $100,000, but they only planned on using like $30,000 of it to pay for school. He wanted to go back to school. And it was kind of just the security of knowing that, if I have an emergency, something comes up, I still have that extra $70,000 there, in case I want to use it. And then once their draw period is over, they're only making payments on that $30,000. So, I mean,
even though you did 100, you're only charged on what you use.
Correct. You're only making payments based on what you use, like a credit card. And then, like I was mentioning before, then we have the HE loan option, where it's a home equity loan, and that's essentially like a second mortgage.
Okay.
The rates are about the same, like in the mid 7s, and they go into the 12s.
Okay.
Just depending on your credit, but that one is like treated like a cash out refinance. If you say, I want $50,000 at closing, you're going to get a wire for $50,000, and then you'll be making fixed monthly payments based on that $50,000.
Right.
So 2 options out there.
Okay. That's good to know. And again, if I got 100, I only need 30. I have the option of 100, but just so in 3 years when it locks out, that's when the payments start?
No, you're making payments the entire time, but you just aren't able to make any more draws from it once the draw period ends.
So on the 100,000 next month, I'll start making payments on the 100,000.
No, you'll only be making payments on the 30,000 that you took out.
But I'm thinking in the sense of this guy took out 100, but he only used 30. He didn't use 30 in a month. In 1 month,
right?
Over time, so you bill for what you use over time.
Correct.
So if I just go in this week, I happen to spend $5,000.
That's yeah.
Okay, then I'm gonna pay next month on the 5.
Correct.
Like a credit card.
Exactly,
Yeah,
like a
got
credit
you,
card.
got
You
you,
can
got
draw
you.
on it, pay it back, draw on it,
Okay.
pay it back during the draw period.
Okay.
Once the draw period is over, then you start making your regular monthly payments, and you can't take any more money off of it.
Okay. So people are opting to choose what? The most, how'd you say, 3-year? What are those years
It's
again?
a 3-year, a 5-year, and a 10-year.
Okay. What are you seeing most that people are opting to do?
It just kind of depends.
Mm-hmm.
Like that particular client that I was talking about, they only opted to do the 3-year.
3-year, yeah.
Because he's going to be in school for only 2 years.
Got you.
So they plan on by the time that 3rd year comes around, because once he's done with school, he's going to be making substantially more money. So
Right,
he's like,
gotcha.
once that's over with, I'm going to take that last year and completely pay it off.
Got you. Good
So,
stuff.
Yeah. It
Good
just
stuff.
just depends on the need.
Yeah, right. And again, you can use this money, everyone, that you have in your current home. Use it to get residual income, as duplex, fourplex, things like that will help increase your income.
Absolutely.
So I've seen people do that a lot as well. We talk about. And don't forget now, Deville Realty, we sell homes too. So I want to take a pause for that purpose to say, selling your home for whatever reason, whether you want to sell to upgrade, sell to downsize, if you're in default on your mortgage, Deville Realty can help. I'm helping families right now that have several type of situations. Some are getting divorced and having to sell the home. Sometimes you can pay the other spouse out and keep the home, or if that's not an option, sell the home. And escrow will 50-50 everything at that time. So don't worry about he getting $1 more than you. No, she will not get $1, not a quarter more than you. They will go right down the middle. The title company will wire it into your account and wire it right into their account. So you guys don't have to worry about that. Those of you that are dealing with probate properties and you lost a loved ones, let me first, my condolences for your loss. Secondly, don't allow the property to go into foreclosure. Also, I'm meeting families who are thinking they have to pay the mortgage because the deceased person passed. You don't pay the person's mortgage if they pass. It's in their name. At the same token, you want to notify the banks, let them know the person has deceased. They'll give you up to 1 year to resolve the matter with the real estate. Now, you can stay there. You don't have to run. They won't put you out. But it must be declared to them of the time of the demise of the person, of the homeowner, right? You need to let them know. Now, the bank will say, what are the plans? Was there a will? Was there a living trust? Now, again, that's another show I got to do again, is the living trust. You need to understand this will thing is not all cracked up like we heard when we were kids. Oh, I got a will. It's not. You've got, and I'm going to have attorney Josh Igiliki Jr. come in the show again. Let's talk about that once again. The importance. Now, you could do it yourself. You can go right there on Charleston and Valley View. Legal forms. It's a package. Putting together a living trust. You can Google it. You don't have to pay an attorney. You just have to have a notarized document for it to be, official, as well as taking it down to the county recorder's office. Done. But the problem with the will, Kristen, is people are doing the will and they still have a court to deal with.
Right.
And they're thinking, well, Daddy left a will, Daddy said. Okay, the judge got to sign off on what Daddy said.
A will is just, and I'm not an attorney, but from, my dealings with probate, with loans, a will is just used as kind of like their wishes.
The guideline.
This is what I want to happen.
The blueprint.
But the trust is what actually enforces the will.
Right.
So
there are costs when you have the trust. There are costs that are saved, such as attorney fees, realtor fees, what is the other one? Escrow fees. So there are several fees associated with doing a will versus the living trust. Go to your attorney's office. Guess what he does? He just reads the will. Mm-hmm. He reads the will, not the will. He reads the living trust order. Your daddy said you would have this, and sometimes they leave fighting because I thought Daddy said he was gonna get that to me.
Oh, well, he's gone now. So
here's what it is. So you can accept. You mean that's all Daddy gave me? I was his favorite child. Well, apparently you weren't.
Right.
I apologize. But nonetheless, those are some of the things we need to know when we're dealing. Because remember, we're talking wealth and real estate at the Greg Deville Show. And these are things that I want you to be prepared for. Again, the probate, we have attorneys on standby who can help you resolve those matters. If they passed away and they did not have a will or a living trust, at the end of the day, you will need to talk to the courts, motion to court. Those of you that have 4 or 5 siblings, there will need to be an executor of the estate, someone to sign. They're not going to have 5 people sign it. 5 of y'all not going to sign. Okay, they're going to pick. Who do you guys pick? If you can't pick amongst you guys, the judge will set an order, which may be another cost for a mediator if you guys just can't get along because you're fighting over what daddy or mama said. So the best thing to do is say, you know what? Either it's going to be the big sis or the baby sis. Maybe the middle sis. Whoever's more responsible. I don't know. Can you find more responsible in family? Because everybody think they... I don't know. That's unique.
You're probably the most responsible one, right?
Well, it's just me.
Oh, yeah, that's
I'm
right.
the only child. Yeah. I'm the only child. So,
well, default.
Yeah. So, only child. But with my daughters, I have 4 girls. I raised about 9, probably raised about 12. Because some of the neighborhood girls, I was like their dad, too. They didn't have dads. They lived with their mom. And I was a single father of 4 girls. And so, of course, the other girls, and then marriage, I brought in a daughter here, 2 through this one, and because I've been married 3 times over 25 years.
Okay.
And so at the end of the day, this is kind of what I've had to learn to deal with in getting information to people. Donnell, I'll call you back, brother. I see you tuned in. Thank you so much.
Do you have one of your daughters? You don't have to say it out loud. That you think is more responsible than the others?
So I have 2 that are doing responsible things, right? And between those 2, I think my baby girl thinks she's the boss.
Oh, okay.
The baby girl thinks she's the boss, and she's the baby girl. However, she will handle affairs right. She does. She's but I couldn't give it to baby girl because it would be, So I have a living trust. So I eliminated all of the fuss and the fight. I have a trust.
Have they seen it?
They have not seen it.
Well, they get mad. You're gone now.
Well, I need to revise. See, that's the good thing about a trust, the revocable and the irrevocable trust, right? So
correct.
You can go in and you can make adjustments. So I told my daughters, when I get old, if you don't come visit me when I get old, I'm a revise, right? I'm revising. That's what you have the obligation to do that if you so choose.
Yeah.
Revise. So depending on how you treat me when I'm old, I'll leave you a little bit more in the pot.
Okay.
You come see about daddy, you take care of daddy, you help daddy through. I expect I'll be an old man still getting around. I'm hoping that because my uncle's 83. My grandmother lived to be 109.
Wow.
And so we have longevity.
In your family.
In our family.
Yeah.
But the ones that have passed were drinkers. And so everybody that has passed was from an alcohol-related death. And so my generation in our family, we stopped the drinking.
Nice.
Because we were alcoholics. We not just drinkers. Some of y'all could just have a drink and be cool.
Yeah.
We real alcoholics over here. You know what I'm saying? The police department know us. Them DeVilles. Yeah, we ain't even answer no more calls for the DeVilles. It's late in the day. They've been drinking now. They'll be all right. They'll be all right. I remember driving up. Police said, "Is this the DeVille's house?" We're not taking no more calls. No more calls. But we had to break the curse of alcoholism, But that's what was killing the young men in my family.
Okay.
And we had one aunt, and she passed away. She tripped on the carpet drunk and hit her head on the dresser and internal hemorrhaging.
Wow. What a freak accident.
Freak accident. And everybody, something. My uncle was fishing on the lake, drunk, slipped on a rock, fell over in the rocks. So the enemy's always been trying to hit him in the head with something. My daddy had an accident, drunk driving, hit his head on the windshield.
Really?
So always trying to get you in the head. So when we understood that alcoholism was a curse, all the men in my family, we don't drink.
Nice.
The men in my generation, at least. I have one living uncle that's left. He's the last living uncle. Shout out to Uncle Jerry Deville in Compton, California. Been living there 40 years. Can't get him to do nothing. He won't move. But he said he's coming to Vegas next year. Now, this is a lie he got me telling. He said, "Look, son, I'm selling the house, and I'm coming to Vegas. I'm moving. I'm coming up there." But again, so we understood that the living trust is very important.
Right.
Right. You want to have that. You want to put it in place. But again, we're talking wealth and real estate, and that's part of real estate too, believe it or not. Because when you don't have a living trust and you do that will, it can be more monies out of pocket unnecessarily. Especially when you know better, you can
do better.
That's what the show is all about. It's about building wealth, giving you information. Now, let's talk for a moment on those who have dealt with bankruptcy. because
Okay.
I know a lot of people punish themselves because they had to do it. And before I go into that, let me just say bankruptcy is not always the answer. Not always the answer. I went through some things a few years ago, and I thought, man, I called the bankruptcy attorney, and I was like, well, what are the options about what I'm dealing with? And sometimes you have assets that you can just get your way out of. It's not, bankruptcy not for everybody.
No.
Because you got too many bills and too many people calling you. I'm just going to bankrupt. Sometimes consolidations, right? You could consolidate everything.
Right. Take
Right.
out a personal loan and consolidate, and then you get a lower monthly payment to where you're not paying $500 there, $200 there. They'll consolidate, do a 30-year not a 30-year, but a 20-year 10-year personal.
Yeah.
I'm getting ahead of myself thinking mortgage terms.
Okay.
Do a personal loan, and now you're only paying one single monthly payment for $500 instead of all the other ones. Again, a HELOC is a good option.
There you go.
Taking another way that you can use your home, take some of the equity from that, do a HELOC to pay off some debt, do a HE loan to pay off some debt.
Okay.
So,
Okay.
yeah.
Those are options. So we spoke that not everyone needs to really necessarily. We think it's an easy way out. Those of you that have, I'm gonna have Kristen elaborate a little bit on if you have done a bankruptcy. When is a person ready to get back in the game of homeownership?
Sure. So a bankruptcy definitely doesn't mean the end,
Right.
right? So if you have an FHA loan, you have a 2-year wait period after bankruptcy from the discharge
date, okay.
that you are able to purchase again. I've been able to get customers in a home after only 12 months, but there has to be an extenuating circumstance,
Right.
and we have to be able to document it.
Yeah. Okay.
Like if someone has some type of severe medical reason, and they can document and show proof that, this is why I had to file the bankruptcy. I have been able to get around that 2-year period. So
Okay.
if there is an approvable extenuating circumstance,
Okay.
we definitely can try to get it done after a year has passed. On a conventional loan, it's a 4-year wait period.
Okay.
And same thing, if there's an extenuating circumstance, we can cut that time.
How
cut
can
that time
someone
in half.
How can someone figure out if they did, in case they forgot, whether they did an FHA or a conventional? How can a person find that out?
We can. Sometimes it'll be on the mortgage statement. It'll
Okay.
tell your loan type,
Okay.
and then it'll show on your credit report.
Okay.
Your credit report shows the type of loan that you have.
There you go. Gotcha.
And then, it'll be in your closing documents. You can always call your mortgage company.
Okay.
Yeah.
In your closing package. There you go. Okay. Because somebody's asking that question right now. I just kind of hear it in my head. Like, well, I don't remember what type of loan I received. They never forget as veterans. They remember that
Oh,
one.
yeah, the VA loan.
Yeah, the
for
VA
sure.
loan for sure. And so if you're a VA and you file bankruptcy, is it still the same for the VA person in a BK?
Yeah, it is.
Still the
But
2-year discharge.
yeah,
Okay.
yeah. But the Veterans Administration, they again, I will say like the VA, it's the best loan out. So they tend to be a little bit more flexible with
Okay.
things.
Okay.
And you can kind of get around it, and they have a lot of exceptions to
Okay.
rules. So
Okay.
the VA loan, it's still the best one out. And if you do have a bankruptcy, the Veterans Administration, they usually are a lot more lenient with getting you back into a home.
Okay. Veterans, let's appreciate our veterans. Veterans, we appreciate
Yes,
your
thank you
service.
for your service.
Thank you for your service. We do want to speak a moment about veterans and what they offer. Now, keep in mind, for the VA, what I've been noticing is that people have, because they purchased a home some years ago under their VA, they're under the assumption they can't use it again. They say, well, I already used my VA. And so can you give that, because I've spoken about it, because I've actually helped them get another home because they didn't know they could. But I want from a lender's perspective directly to tell them, can they get another home even though they may have lost their home some years ago, deed in lieu, short sold, foreclosed? Can you give them some encouragement on that?
Yeah, absolutely. So, one way that you're able to utilize your VA loan again is when you sell the home that had a VA loan on it, we can get your entitlement restored.
Right.
So what we do is we take the settlement statement from the sale of the prior home, we
Right.
submit that to the VA, and then they go through a process on their side of getting the entitlement restored.
Okay.
Now, they've been doing a lot of layoffs at the VA, so I don't know how long it'll take now.
Yeah.
It used to be a relatively quick and easy process.
Okay.
But yeah, that's one way you can do it. If you've had a prior VA loan and maybe something happened with it, what we do is we reach out to the VA, we get your certificate of eligibility, and then we do a calculation on the remaining entitlement. So it's a partial entitlement calculation.
Yeah.
And then we can see how much entitlement is available for the purchase of a new home.
Okay.
So in that case, you won't most likely, you won't get the 100% financing because it's partial entitlement, but we can look and see how much is left over and how much you would need to bring in.
Can a person through Guild Mortgage, a family member, not a husband and wife, but a family member, go on a loan with their parent or significant other? They're a veteran, but they're not married. Can me and my cousin buy a house together? He's veteran, I'm not.
No.
Can't. You heard that, right? Because people have been asking me about that.
No.
You can't because it's your daddy. Well, my daddy was veteran. Can I use his benefits? No.
No, you can do it with a spouse. So if you're a veteran and your spouse is a non-veteran, you can do that. If you're a veteran and you're purchasing a home with your parents, you can, but the VA will only insure the portion of the loan with the veteran. So that means you're still coming in with a down payment. And
Right.
usually the reason that people opt to go with the VA loan is because, you get that 100%
Right.
financing.
Right.
So in a case where, it'd be veteran and their parents, then the VA, they would only insure, a portion of the loan. And you would have to bring in the rest. I actually had a situation like that just come up.
Yeah.
They ended up going FHA because, the amount that they would have to bring in,
Yep.
they just, it didn't number-wise.
Right.
FHA was just a better option for them for the lower down
and,
payment.
and that makes a great lender, you all. When you have a lender who can look and give you options, right? Options are always wonderful,
Right.
I love the options that people say you could do this. You can get this Maserati, but this Mercedes has less, whatever the case. But I did want to say on the VA, I do remember having a client. They weren't married, but they had been longtime partners, and he was able to get the loan. And she was never satisfied with what his loan could do. And for what his amount was, could never find anything that she liked. But it was his loan. But they had been 30-year partners.
Gotcha.
And so she looked at him and said, well, I guess we better get married, you old fool.
Because they don't want to bring in a down payment.
They didn't want to bring in a down payment.
Yeah.
So they had been married before. They lived together. They're partners. But, they do better as not husband and wife. From what I understand.
Yeah. I've heard that before.
Yeah. And so they wanted to buy this house. Been hearing me on the radio for years at Mr. DeVille. So he called me, got approved, and they run it. We looking at houses. But for her taste, the rooms just weren't big enough for what she has. But she said, yeah, I guess we're going to get married, you old fool. We'll call you back, Mr. DeVille. We'll call you back. I thought, whoa, okay, I had nothing to do with that. But they got married and got approved for a substantial amount more. And, so I'm, hint, whatever you got. Y'all partners anyway. A piece of paper made it legal that they were able to do it under the VA loan.
I've even had people get a divorce to get not the VA loan, but to do an FHA loan.
Yeah.
Because, with the FHA loan, you have to count your spouse's
debt.
debts.
Yep.
So VA is pretty good about that because if you can show that your partner, that they earn their own income and they earn enough to carry their own debts, then we can ignore them. But on an FHA loan, you have to count your spouse's debts. and they weren't getting approved for the amount that they wanted. And so, I'm like, okay, this is how much you're pre-approved for. And, they're like, oh, well, that's not really that much.
Yeah.
And then I get a phone call later on. It's like, well, we ended up getting divorced. And I'm like, well, what happened? And, it's not my business to go into the weeds of things. But yes, like all of a sudden now they're no longer together on paper. And he's still moving forward by himself with the loan.
Yeah,
so.
she's still going to look at houses with him. She's still picking the house.
Right.
Not my business.
Not my business.
I just get paid to open doors. I just open the door. Is this the one? No. Click, lock, put the key back. Let's go over here.
Right.
And find it. And they found it. And, I had a client. We sold a house, and he was married to somebody else, and getting the house it was crazy. But they were able to get the house. The wife signed off. She's like, I ain't got nothing to do with that,
Yeah.
But weird. But nonetheless, things are available. You just got to make the call, everybody. Don't put off and say I can't do it, or people shoot themselves in the foot, Kristen, when they
I agree.
when they just don't think, well, next year. I'm like, why would you wait till next year? We got a crazy administration now.
Right.
And people, well, rates are high. And let's talk about that, because when you pay rent, the interest rate's 100%.
Correct. And you're not complaining about paying that.
And they go up every year.
Right.
The mortgage is fixed. Yeah, it's going to be more. But by the time you keep renting 5 years, it's going to be when you would have bought the house.
Exactly.
Right?
And now you're priced out the market. Now you can't afford to buy anything.
Or you're going to afford to buy.
The prices are going up.
Well, you're going to afford to buy. It's just going to be a little house. It's going to be a tiny home by the time you get ready. I had a lady tell me, well, I'm going to just wait till next year. She was good at $475. By the time she made up her mind, what she could buy was nothing.
Yeah.
Was nothing. So she had to settle for what she said. I should have bought. I said, it's not my job to say I told you so.
But
I'm not here to pull your leg. I'm not here to twist your arm. Although I like to twist your arm and make you get what I'm trying to tell you. Like you said, they took the money back that was allocated for down payment because people weren't responding. You got to respond. Listen, we're here to give you free information at the Wealth Builder Show with Greg DeVille. With my guest today, Kristen Whitney is with us from Gill Mortgage, talking about homeownership, whether you BK'd, veteran, lost your home, foreclosed, 2 years discharge, BK. It's available. Right. You got approved to buy a house. To rent that house. And you got the one you didn't even want. You applied for another house. Isn't that amazing? They look for rentals. The one they really want, they can't get. So they settle for this. But when you got to settle for buying, you got to.
Then it's a problem.
It's a problem. I don't know. Maybe it's just me, Kristen. I don't know. But I run into people who they say, well, they're not going to live. When I look at your loan, I don't even need to ask you where you want to live. Because based on your loan value, it's going to tell you where you can live. Yeah, where you can get the best bang for your buck, right? Somebody say, well, I'd like to buy a house. And I said, based on this loan amount, you're getting a townhome.
Right.
Well, why he said, especially where you want to live. People want to live in Henderson with a $420,000 loan.
Those houses are going away.
Oh, my goodness. You can't find it in Henderson. It's in the old area.
Old Henderson.
Old Henderson. You're like, I don't want to look at that when I come out the house. Yeah, well, it's where we are. I would say if you can and you got your tax returns, save your money. Because when you do use the funds that are allocated for down payment through the programs, the rates are a bit higher. Okay, so if the rates are a bit higher and you could save your money and get a better rate and put it with your 401k, you're going to do much better. So let's talk about some 401k. Explain to someone the benefit of it.
The benefit of
using the 401.
Well, it's money that you can, pull from. It's your own account. You're essentially just borrowing from yourself.
Right.
So you definitely can use funds from a 401k to use towards a down payment, your closing costs, and also reserves. Sometimes, we just need to show that, you'll have 3, 6, 9, 12 months reserves. Once the loan closes, you can use a 401k for that also. All we ask is that you give us the terms of the withdrawal. Okay. And the 401k providers, they have plans set in place for that. Okay. 401k companies, they have, authorized uses for the funds for you to, take funds out of it. and purchasing a house is one of them. So they usually just ask for a copy of the loan estimate, have you a 1003, have you complete some paperwork, and then they send you a check. It's like a really easy process. And again, all we ask for is to document where the funds came from, the terms of the withdrawal, and then you're good to go on our side.
The other thing I was hoping for from you, and I think you're going to back me on this, is that you get a better rate.
For having more money down?
Well, using your own money versus the program.
Oh, correct. Correct.
Yeah.
Because the rates for the down payment assistance programs, we don't have any control over that.
Right.
The rates are set by the provider, and then they may charge anywhere from 0.5 to 1% an origination fee.
Yeah.
And that's basically, so that they can keep
money in the pot.
Filling up the pot.
There
Exactly.
so
that they can lend to other people. But when it comes to rates and people saying that now is not a good time to buy, it's like, okay, so let's say you get into a house now and the rates drop. So just do a rate and term refinance and lower your rate.
Right.
I was saying the last time I was here, we have a program where once you close with us, you have 5 years to do a rate and term refinance, and we waive all of our lender costs.
Okay.
So we're not going to charge you any lender fees to do that.
Okay.
On the other side of it, let's say that you got a rate now that you're not happy with, and with the way things are going, the rates go up.
Yeah.
So it's like, well, aren't you glad you got the rate that you did?
You're locked in right there.
Yeah.
The other thing I wanted to mention with using a 401k is without penalty to purchase a home.
Right. Like I was
Yeah.
saying, they
Yeah.
do have specific reasons, designated reasons why you can draw money from your 401k, and purchasing a home falls under one of the reasons that they allow you to take funds out. Yeah.
Right. Because people borrow to put a transmission in their car or down payment on a car, but there's up to a 10% penalty to do that, and they don't mind it. It's amazing to me, people mindset, but they'll pay the 10% to buy the car, but you ask them, you tell them you could use a 401k without penalty, and they're a little reluctant to move on that. I'm like, I don't know. Maybe my passion is just too great for what I do. I'm just like, I understand it. Why can't you get it? I'm helping you.
Yeah.
Because what I've learned is I don't chase money. Money chases me.
Yeah, I'm not a pushy salesperson.
Yeah, I'm not. I'm not making you, but I'm giving you the information that certainly will spark something. Turn the light on. Now look at the light. Just look at the light, Mr. Brown.
Right.
Go in. But again, you get people who, for whatever purpose, whatever reason, they're delayed in moving on it. Again, I've had to learn to take my energy to people who are motivated, ready to proceed, ready to move forward.
Right.
Don't let the industry, the market, where we are right now, the way things look right now, you're still going to pay a mortgage. And believe it or not, that landlord is either next year going to sell that property, or he's going to refinance that property, maybe do a HELOC or a HELoan on that property. The rate is going to increase, and guess what that's going to do to your rent? Increase the rent, right? So when you're a landlord, you take money out and you let the tenant pay the debt. Correct. Right? So I go buy another car, and I increase your rent by $300, $200. Well, that's off my new car, baby. You know why? Because I can. Why is Elon Musk, doing with it? Because he can. Nobody stopped him.
No, and there's no rent control in Las
No
Vegas.
rent control.
So they can charge you whatever they want. And we saw that happening after COVID.
Oh, my.
Every time someone was getting ready to renew their lease, it's like, well, it's going to be another $400 now, another $500 now.
Yeah.
So,
and you were better off staying and paying than relocating, because you had to pay double the amount to move somewhere, and a security deposit, and the rent was going to be higher. So you're like, well, I might as well just pay the $4. He bullied me. Right. I might as well pay the $4. Somebody called me, the landlord went up $150 or $200. I said, you might as well just stay. Well, I think that's not fair. I said, well, they do it because they can. Yeah. And so I've been telling you to get your house. I've been having money allocated in the down payment programs. Right. All you got to do is make the call. If you're not ready now, it's never no. It's just not right now. Right. But let's set a game plan. Let's get a directive on how we can get where we want to be, and get in line to position ourselves. Isn't it a space where they say, on your mark, get set, and then you're ready to go?
Right.
Let's get you
like
on the
that.
mark. Yeah, let's get you on the mark. Let's get you set so you can go into home ownership. Now, there are people whose families never owned homes, right? First generation homeowners. I've helped many of them. They grew up. One young lady cried when I gave her the keys. She said, Mr. DeVille, you don't know. And she used a 401k. She said, Mr. DeVille, you don't know how valuable this is meant to me. She said, because I'm bringing my mother to my house. She said, 3 generations, no one has owned a house in my family.
That's why we do it.
That's why we do it. We want to see the kids happy. You know, kids are playing on the balcony of an apartment building. Many kids today don't know what it's like to have a backyard. And you work so hard as a parent, whether you're a single parent, married, you guys are working so hard to give your money to the landlord. You go to work to pay someone else. I hope I'm cutting deep with that, because you're paying to go to work. You pay gas in your car to service your car, to keep up, to go to work, to pay someone else's mortgage. I hope that pisses you off. I really hope that ticks you off. Like, I'm running to pay my money to give it to somebody else.
Right.
I wish I would.
Right.
At some point, you've got to draw a line in the sand, Kristen.
Right.
Would you agree?
I agree.
That stop wasteful spending.
Right.
Let's decide we're going to get on our mark. We're going to get set. And we going in 2024. Now, we've just started.
25.
It's 25. We're going into 25. But tax season is here. You got some money. Don't think about what you're going to do with it. God forbid you give it to Amazon. Oh, my good. Amazon is doing so good.
And we got enough TVs.
Got enough TVs. Well, no, people are upgrading TVs now. People are getting bigger. I got a 75 for my birthday, and I'm looking at it where my wall is so big. I'm like, I should have got an 85. So I'm like, well, maybe I'll take 75 to my room, put an 85 right there, because it is. But my daughters got together and gave it to me for my birthday. But I don't want to hurt their feelings, right? I don't want to hurt their feelings, so I'm going to leave the 75. But the wall is so big that it looks like a 50-inch on the wall.
Oh, yeah.
But it is 75. Thank you, girls. Thank you. Daddy loves you. Daddy appreciates your hard effort. And I'm just teasing. We're going to put the surround sound. We're going to make it work. It's beautiful. It's beautiful. We love it.
The 75 is in the home that you own, though. So that's the
I
difference.
own the home. Yeah. I can move it around. Somebody called me talking about, Mr. DeVille, I heard you're a handyman. Can you come hang the TV on my wall? And I want to put up some wallpaper or something. I said, number one, I'm not a handyman anymore for anybody. I don't do the work. I'm a handyman for myself. And I said, number two, you can't put wallpaper on those people's walls. She said, well, while I pay rent, it's mine. I said, yeah, but the lease is about to expire sometime in the next year. So technically it's not yours. And then when you peel it off the wall, you disrupt the wallpaper or the drywall and the paint. So now you're going to lose your deposit fixing up other people's house for them to get the equity. And then this year, watch this, in 2025, I can assure you there's going to be some landlords, for people who are listening to me today, there are going to be some landlords that's going to sell your home.
Yeah.
What are you going to do? Where are you going to go? So why not you? In fact, I just sold a home to some renters, the home they live in.
Now that's smart.
Yeah, because they called me, been listening to my radio show. Again, it's radio stuff. Mr. DeVille, our landlord is selling. And I said, how long you've lived? They've lived there about 5 or 6 years. And I said, do you like the home you're in? They said, yeah. I said, would you consider buying the home you're in? I said, think about it. You won't have to move anything.
Right.
You already settled, right? End of the day, we sold them that house.
Nice.
Yeah, we sold them the house. They were to get pre-approved. Once I talked to the owner, here's how much he wanted. He listed it for himself. He said, well, I don't need since you already got it sold, they just had to approve. They got qualified. They approved. You can buy the home that you're renting. So be encouraged. You don't have to move any boxes. You've been there anyway.
Right.
You already paid 5 years of equity into it.
Right.
I mean, it's not yours. You won't get any of that, right? You won't get any of it. However, you've been practicing paying. That's good. When you pay rent, you practicing how to pay a mortgage.
Right.
The advantage to the mortgage is it's not due until the 15th and not late until after the 30th.
I tell people that too. Like,
Yeah.
you have your
literally 30 days.
Yeah, you're renting your house. If you don't pay them by what, the third?
The third.
You're already getting a notice. Your mortgage, you don't have to pay it until the 15th, and then after the 15th, you still have time. You just have a late fee. As long as you pay it,
$30.
Yeah, as long as you pay it before the 30th,
exactly.
You're good.
Before the 30th at midnight.
Right.
I mean, one time I forgot. I thought I paid it. It was $11.55. I was like, oh, I forgot to pay. I'm gonna get it 30 days. I hear him get on that computer. Bing, hit it, and it. I didn't get the 30 day.
Yeah, as long as they get that payment
but
submitted
it was
before the 30th.
$11.55 on the 30th.
Wow, you're lucky.
Yeah, and I had forgotten. I kept saying I was going to pay because that's what it is with a mortgage. You don't have the stress of that, right? You don't have to worry about it. But by law, the landlord has to serve you notice by no later than the 10th of the month.
Okay.
He has to, by law. Otherwise, you're going to be in there another month. So that's why landlords serve you notice after the 5th. They'll get you about the 6th. The 8th, you're getting a 5-day pay or quit.
Right.
And depending on if you're North Las Vegas or the city, North Las Vegas 3-day pay or quit. I think the city's 5-day pay or quit. So depending on each sub-town, they have their own rules on that.
Gotcha.
But you don't want to get those notices.
No.
Because the amount of the fee is it's more than you really probably want to pay. But there are a lot of people who paid biweekly. And I'm hearing these property managements don't want biweekly payments. I'm like, what do you mean? If that's how a person's paid, they want you to pay the whole month rent, but you're paid biweekly. Let's do away with that in 2025. Let's go forward. Let's get on our mark. Let's get set, and let's go right into home ownership. Well, my engineer has sent me a sign that it's time. We have enjoyed you, Kristen, once again.
Yes, good conversation.
Thank you so much for coming in.
Thanks for having me.
And we did it off the cuff.
Yes.
We had no notes. We just did. She's like, well, we're going to talk about it. We're going to just free fall this thing, right?
We did good.
Because the information is so powerful.
Right.
Right? You just want to, not scripted information.
Right.
But from the heart.
Right.
We literally spoke from the heart.
Yes.
To tell people you can do this.
You can.
You can.
You can.
And you just need to contact 702-349-0162. I'll put you in touch with Kristen so that she can get you moving, get you on that mark to get you set so you can go into home ownership 2025. Stop saying the end of the year. If you just signed a lease, don't worry about it. A lot of these property managements, when you have a window of opportunity, I have seen where they've allowed you to relocate. Now, they're going to keep that deposit, but you're getting the whole house.
Right.
Right? You're getting the money, no money down. You're using a 401k without penalty. You're a VA with no money down. Whatever the case, we're here to help. Whether it's getting a home equity line of credit to do improvements or purchase some investment properties to do residual income, whatever it might be, we have Kristen with Whitney with Gill Mortgage to help get it moving. Now, everybody knows I work with about 9 lenders. She's on the team now. She's got great information. She's great with information, getting you pre-approved. And if you're not ready, you mentioned something about helping them kind of learn where their credit needs to be.
Path to home ownership. Yeah.
Okay.
So don't be embarrassed.
Yeah.
I have seen all different credit types. I used to be one of those ones in that all different credit types. So no judgment. All I want to do is help you get ready and let you know what you need to do in order to get your scores in a position to where you're able to get that down payment assistance and get into a home.
Well, you heard it here. Greg Deville, Wealth and Real Estate Show every Wednesday at 12 noon right here at hot702.5fm.com. This is what we do. This is what we talk about. So share this video with someone. Maybe you're locked in. You're good to go. But someone you know this information before monies that are allocated are removed from being disposable, being accessible to families. Okay. So again, it's a little cloudy outside, but it's 1 o'clock and we're out of here. We're done. I'm so glad to have come here every Wednesday. I'll be back next Wednesday. I look forward to talking to you then. And until then, may God's best be yours. Take care.
Jones, hey, Greg Deville was at it, man. Hey, if you want the real, holla at Greg Deville. He'll tell you how to do it. Now get to it. If you want the real, listen to Greg Deville. He'll tell you how to do it. Now get to it. I'm talking real estate, building wealth, making money for your family and yourself. Now tune in. We here to help. Now tune in. We here to help. wanna be a broker, you wanna be